Hey, everybody. This week, Paul and I are going to dive into why that saying that you might hear quite a bit if you're searching around YouTube, social media, that cash is trash, is complete nonsense. What did we hit on here, Paul?
Yeah, I mean, we fell short of calling it a stupid idea or stupid slogan, but a slogan it is nonetheless. Kind of like buy term and invest the difference is a slogan, not really a strategy. And you really need to listen to who is telling you that cash is trash. Do they have an agenda? But we get into kind of where you keep your cash, obviously. If you're listening to this podcast, you know where you keep it matters. But beyond that is the idea of having a large amount of financial value that you can get to right now is going to make you ready for opportunity. You're going to be able to weather the storm, whatever happens, and you're going to feel good about it. So stay tuned. Enjoy.
Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right. Welcome back, everybody. Hey, Paul. What is happening, man?
Not much. I've been retired a month today.
Yeah. We were just scheduling when we're going to do the next podcast. And I said, hey, Paul, what about next week? How about Monday afternoon and Friday? Paul's response, okay, this is all I do. Sure, whenever.
Yeah, looking back, it was difficult for several years to get scheduled up.
Right, it was. I mean, we
had limited windows of time where I could do this.
Yeah, right. And we were pretty consistent about the same day of the week, I think. The same 1 or 2 days every single week at the same time.
Right.
So, yeah, now we're much more fluid and flexible. It's actually a lot easier. So, thank you for retiring.
You're welcome.
Thank you for your service.
You're welcome.
Yeah. So, yesterday I went flying.
Oh, you did?
I took my first lesson to get back into it and get checked out in the Cirrus SR-20.
Nice.
Oh, yeah, it was fun, man. Flew around, and I'm going to I'll do a few flights, get checked out, get my instrument currency back, and I already got a trip planned, a cross-country trip planned in May.
Nice.
So I'm going to go.
Just be careful. You got one engine there.
Yeah, but it's got a parachute.
It's got a parachute? All right.
So that's nice.
What's the flight profile where you can actually yank on that thing?
You got to be above 600 feet. It's like 600 to 2,000 feet is what they consider inside the envelope.
Okay.
But
and then what airspeed?
Like 130. You zoom for 130 or something like that, which you're pretty close to 130 when you're just cruising around anyway.
Cruising, sure.
So I think that's the right number. But yeah, and I guess it's successfully been used below 600 feet, AGL, above ground level. But and to date, it's like every single person who's ever pulled a chute has walked away from it.
Yeah, I'm just trying to picture like, I'm a helicopter guy, but obviously I understand how it all works. But like, you can glide.
Well, yeah, no, you would absolutely glide and try to land it if there's a good place to land.
Good surface and stuff.
Right, but if there's not, like if you're over the mountains in Colorado, it's at nighttime or something, you're pulling that chute.
Yeah, you're pulling the chute. Ugh.
Yeah, it comes up pretty fast.
Make sure you check that fuel sample.
Yeah.
Do you guys do that? I don't even know.
Yeah, you actually do. You have to, when you do the walk around, you have to drain the fuel in 3 different spots, or 4 different spots, 2 on each wing.
Oh, wow. Okay.
To check the fuel, make sure it looks the right color and there's nothing in it, and then pour it back in. So it's kind of a long process, the walk around there. But yeah, it was fun, man. Got my next lesson next Wednesday. I'll start taking one of the boys up with me every time I go, throw them in the back seat, and they can fly along with us.
Sweet.
Yeah. Oh, maybe we'll fly out and visit you in Tennessee this summer. Me and the boys.
Come on down.
Yeah, that'd be fun.
As long as it's past, hopefully we move in August. That's the latest we're being told. So we'll see.
Okay.
Yeah.
All right. Yeah, delays never happen in construction.
No, they're always on time and under budget. And
yeah.
No.
And they never install the wrong doors or anything like that.
Yeah, exactly.
Yeah.
Well, in their mind, they were trying to, we're trying to save you money. I'm like, if I was trying to save money, I wouldn't be building here.
Yeah. That's good. All
Anyway,
right, man.
enough baloney. What are we talking about today?
Well, so it kind of has to do with your construction. The fact, which anybody who's been listening for a while recently knows that the only way you were able to get this house built was because you're sitting on a large pile of cash
Yeah,
right now.
100%.
Right.
Yeah.
And without that, a bank, it would have been hard to find a bank to lend to you without cash reserves.
Yeah. It seemed to me that the banks had different criteria, but the lender that I ended up going with, mainly because I really liked the loan officer who was actually very competent. That's few and far between nowadays, I think, in just a lot of industries, but I really liked him. Anyway, but they required me to have significant cash reserves. One of those being I had to put 1 year's worth of mortgage payments with them at close. I had to have that before closing at their bank.
Yeah. So that's a good number. That's mortgage payment, the full monthly mortgage.
Full, yeah. So
Yeah. To include like interest, I mean, taxes and insurance.
I think this was just P and I
Okay.
calculation. So
Either way, I mean, that's the majority of it right there anyway. But so,
yeah, no
yeah,
doubt.
that's a good
Yep.
amount of cash. And most people don't have access to that much cash that's not locked up where they either have to take a loss to pull it out early from something, some opportunity, or can't pull it out at all, or have to get hit with penalties and taxes and things like that.
Yeah, like I said before, they didn't care about 401k money, and we've brought up countless examples on this podcast of I had another set of friends different from the ones that I was thinking about that were contemplating building a house. They had acquired the land and then they ended up just buying a house, but they made the mistake of like paying off some debts prior to like a couple car payments. They just like paid off with cash that they had. And I was like, oh man, that was a mistake. And of course, it would have been a mistake. But anyway, they ended up buying a place, an existing home that's very nice. But it just for the construction piece, it would have been a problem because they sacrificed all that liquidity. So there's just this unseen advantage that or unanticipated. The future is unknown. There's just such a tremendous advantage of sitting on a good amount or the right amount or an adequate amount of financial value that you can get to. That's liquid,
Exactly.
another liquidity.
Right. Which flies in the face of a lot of conventional, maybe marketing hype that I hear a lot out there. You get on YouTube, you start searching, investing and how to make money, and you hear this common theme, this common phrase that people throw out. They say cash is trash, and everybody says it like they're the one that invented it.
Yeah, that's the buy term and invest the difference. I put that in the same.
It,
It's
it
in the
is.
same bucket or same category of just
Yeah,
a clever slogan, right?
it is. It's a clever slogan, and I think I get it. What people are saying is, they also say savers are losers. So if you just have your money sitting in cash, you're a loser because you're losing value through inflation and you're missing out on opportunity. So what these people market and advertise and suggest and I see it. Hey, I love real estate investors. God bless you all. I used to do that actively. I still invest in real estate. I think it's can be a phenomenal investment. But you hear from real estate investors all the time, cash is trash. You got to keep your cash locked up in a deal, moving from one deal to the next. Never take it out, never spend it, never save, always invest. And we know
That's why
firsthand
they're always
from
coming to
some
me for
clients.
money.
Yeah, right. Yeah. They're looking for money all the time. And I get what they're saying because you want to put your money to work, making money, which is a smart thing to do. But without a solid foundation of cash, of capital at your disposal for a number of different reasons, a number of different things that come up in life, then at some point you're going to get caught being cash poor, maybe have all your cash tied up in deals, some of which may never come back to you because let's face it,
Sure.
not all deals work out.
Yep.
But you'll be looking to borrow money from somebody Probably because you'll need it, it's going to cost more. Just like a bottle of water is going to cost a lot more if you're in the desert than it's going to cost when you're sitting at home. Right? It's because how bad do you need it?
Yeah. Yeah, that's right. And I keep, the same types of people keep coming across my mind of, just, you're so sophisticated, then stop asking me for cash. Like,
right. I mean, that's the problem is they're not in the banking business. They're in the, say, real estate investment business or car flipping business or whatever they're doing with their money. They're in the stock market business, but they're not in the banking business. They missed out on the foundational business that they should have built their business around.
yeah, so I think everyone's probably flipped through, Reels or Instagram and seen, it's Facebook Reels and Instagram calls it short. No, it's Facebook Shorts. No, YouTube Shorts. YouTube Shorts.
Oh, you're so old. It's
I don't
YouTube
know.
Shorts.
YouTube Shorts. Instagram, is it Reels?
I believe it's Reels.
Right? Okay.
Don't quote me
So
on
there's
that,
this
but
kid that goes around and asks, like, "Excuse me, sir, what do you do for a living?"
Oh, the School of
And-
Hard Knocks. Everybody should
Yeah,
follow the School
yeah,
of Hard
yeah.
Knocks. That guy's awesome.
Yeah, pretty interesting. And most of the people will talk to him, and one of the questions he asks them is, "Have you ever been broke?" And
Right.
they pretty much all of them has said, "Oh yeah." And some, but not all, they were broke because they were like they were over leveraged
Yeah.
and it didn't work out,
Yep.
right?
They didn't
So
have
I
cash
think-
reserves.
That's right. I think, and we're going to link a Warren Buffett video in here. It's a little montage that I just found because as we were researching this topic, I searched for, cash is trash. That's literally what I typed into YouTube and found this video of Warren Buffett. And I think that's the actual title is Cash is Trash. It might have a question mark or something, but well, the title is deceiving, Dave, because Warren Buffett was able to, weather the storm in 2008 financial crisis. He was able to take advantage of profitable opportunity because he had a mountain of cash. I think at the time Berkshire Hathaway had like 80 billion in cash, and they bought BNSF, I think, for 26 billion. Anyway, so it's not that cash is trash. What he did say in the video is that cash is a bad investment. And of course, cash really isn't
It's
an
not
investment.
an investment, right? Yeah.
It's not.
Nobody
Cash
buys
is,
cash.
dollars, they are just a medium of exchange. Cash is just a form of value that you can get to right now. And that's okay. What you need to decide, listener, is, how much cash do you need? Dave and I were talking earlier and, like to have the idea of someday having a certain level of cash on hand at all times, powder dry, ready to rock and roll. Anything above that is now opportunity, putting it to work, doing, maybe financing something with it, but always having that basement value of whatever that it is. For some of you, it might be 100,000, might be 50,000, might be $1 million. Who knows? Everyone's different.
Well,
But having
and
that-
here's the thing with that. Let's stick on that a little bit more because some people will call that your emergency fund. I think we're talking above and beyond emergency fund, but I think at a bare minimum, absolutely everybody needs an emergency fund. I mean, I don't know how many times I got to tell young teenagers who are like my son's going through it's called an investment banking class in high school, which is awesome, because he's learning all these things. It's, of course I'm unlearning him on some of those things, but they're talking about investing. I'm wondering if they ever talk about saving, but everybody needs that emergency savings. So if you haven't done that step, like that Dave Ramsey basic step of save, 3 to 6 months worth of expenses, then don't even talk to me. Get an emergency savings, but that can be inside your policy. If we want to relate it back to infinite banking, put that money in your policy. That's where it should reside.
Yes.
But above that, typically when I started out, I had that emergency savings, and above that was my opportunity fund. Well, now that number is risen. I don't need the certain number you and I talked about earlier of what I want to have in cash. That's way more than emergency savings.
Yes.
But now that's my new number, that I want to have at least that much at all times. And then anything above that is opportunity fund. So I think your number as you capitalize your system, your series of whole life and dividend paying whole life policies, that number that you always want to have in cash reserves is going to climb.
Yes.
And then it'll just increase. It won't decrease.
It's all relative.
Yeah.
What was a lot of money to me when I was a 22-year-old second lieutenant is not really a lot of money to me now as a 45-year-old retiree.
Yeah. Yeah, exactly.
It's all relative.
It is. Are we advocating that you shouldn't be putting your money to work in places other than your policy? No, of course not. You should have other investments. Like, you should be acquiring assets, I think. But there's that line between, having a solid foundation of capital at all times and being an eager investor. Oh, I've got cash value. How quickly can I put it to work? I need to put it to work. Otherwise, I'm losing money.
Yeah. Yep. And I've addressed that with several of you over the years, clients, that, capitalizing your whole system of whole life policies is doing something. I've said that a bunch of times, and it is. And the more value you accumulate, the better the opportunities that'll come across your desk. Like we were talking earlier, I had a couple of really good opportunities come across my desk in the last 2 weeks. I'm not interested in them really, but they're very profitable, and I consider them very safe as well. But I'm not in a position where I want to do that right now or need to do it. I've got other priorities, right? I'm the banker, so I'm going to prioritize what I need to do to move this. Really, it's the house, of course. But yeah, I need to stay liquid for that thing. Nothing wrong with that.
Not at all. I think it'd be a fun exercise to actually get a piece of paper out and write down, just at the top of the paper, title it, "Things a Bank Won't Lend Me Money For." And then list as many things you think could come up over your lifetime that the bank will not lend you money for.
Are we going to list any or no?
Yeah, why not? What do you have in your mind?
How about a medical expense?
Yep. Good luck getting a bank to lend you money because, I came down with a disease and it's going to cost me $10,000 and insurance won't cover it.
Right.
They're not going to lend to you for that.
No.
Yeah.
No, they're not.
What about, you want to send your kids to private school, like, K through 12. Is the bank going to lend you money for that?
I'm wondering if you could get a personal loan. But again, folks, if you look at personal loan rates, they're not good.
They're not good.
They're not good.
Right.
But probably, generally not. Generally, people are not. I don't think they're borrowing. Well, I mean, I suppose they could be in theory, but I don't think they're financing their education like that. They could be. Write in the comments if that's something that you're doing. That's interesting.
It's almost like why are people so okay with financing college, but they wouldn't even consider it to finance private school for high school?
Yeah.
Like, you can't finance high school education, but I'll finance college all day long. I don't know. I might argue that your foundational education and molding as a young human being, high school will play a bigger part in that than college would.
Yeah, let's face it. There's hours of video on YouTube, on Reels, or wherever that you can watch of people being interviewed and being asked basic civics questions or basic questions, basic mathematical questions or whatever, and they literally what country borders the United States to the north? And they're like, North America.
And I bet some of those people have a college degree. They have a bachelor's degree.
This is going to make some people upset, but I really mean this from the bottom of my heart. When everybody has a college education, it's no longer special.
It's just like anything else. What's the value of something that's in a surplus? The value of it goes down. The value goes down. Surplus.
And Nelson wrote that in Becoming Your Own Banker 25 years ago. he probably has been thinking about that longer. And
Oh,
Nelson had a degree, right? He was an educated man, a
yeah.
lifelong student. But, I'm sure he thought that longer than before the year 2000.
Yeah. And that you mentioned the School of Hard Knocks channel that everybody should follow. That kid, he actually asks, I've seen it asked to several people, did you go to college? Did college help you become what you are today? And some of them actually say yes.
Yeah,
Most of them say no,
right.
but some of them say yes because they said, well, yeah, because that opened the door to this job where I learned this, and that opened the door to me doing this over here. So you can trace it back to the opportunities they received from that experience, but probably not directly related to anything they learned in college.
No, I just, I have some really great friendships from college and great network.
Yeah.
But I don't use my degree necessarily, I don't think, or my master's degree. That was kind of a waste of time.
Yeah. Well, same here, but you had to do that to check the box to become a major in the Air
No,
Force.
we don't need master's degrees for anything
We did.
in the
and
Army.
then they told us we didn't, but everybody knows you did.
Right.
It was one of
'Cause
those unwritten rules.
It wasn't a discriminator at all. The only thing that mattered was your evaluations for promotion. I know my old boss got made 06 without a master's degree.
Wow.
Yeah. He's got
Yeah,
one now. He's got two now, but
That
still.
doesn't happen in the Air Force.
Yeah.
Yeah.
It's almost like they value the wrong things in some cases.
Yeah, you could be the worst tactical aviator in the entire squadron.
Worst
but if
leader.
you had your master's degree, good job,
Good to
guy.
go. Yeah, good job.
Right. Your master's degree in military operations,
Right.
which is what I got. Which, I don't know. I guess in the military it's useful, but do I remember much from it? I don't know. I wrote a lot of papers.
Right.
Responded to a lot of peers' work. Anyway, so that's just a fun exercise. Like, what are all the things they're not going to loan to you? It's a whole lot of things. If you lose a job, it's a bank going to loan to you.
Most things you will not get a loan for.
Right. I lost a job. Can you loan me some money to get through to my next job? Good luck.
Nope.
No. Yeah. So there's other companies that hold massive reserves in cash. Right? Like if you were going to invest in a company, would you want to invest in a company that has large cash reserves or a company that's leveraged to the hilt?
Right. And I like the parallel, and a couple of examples are Berkshire Hathaway, Amazon, and Apple.
Wow.
But the parallels to the mutual life insurance company or the mutual life insurance industry, or really any insurance company, who are mandated to have certain levels of reserves, right? So that they can meet their obligations where, you crash your car, you get a check in the mail. Your house burns down, you get a check in the mail. You graduate from this earth, your beneficiaries get a check in the mail, right? Well, they have to have money. The companies have to have money in order to pay those claims, right? Mm-hmm. And actually, in the video with Warren Buffett, he mentions that, and he must be referencing Geico because he bought Berkshire Hathaway owns that, I'm pretty sure.
Yep.
So he's like, we have to keep a certain level of cash because I might have, house fires that I need to pay for or whatever. And it was very interesting to hear him say that, not without mentioning the company, obviously, and I think at the time the host was saying you have $100 billion in cash right now.
Wow.
Yeah.
100 billion.
Yeah.
Can you imagine? Just put that in a pool and swim through it like Scrooge McDuck.
Oh my goodness.
That's a lot
So
of cash.
I think the video is 6 or 8 minutes or something. Watch the whole thing and just really listen to what Warren Buffett says. He's not saying cash is trash at all. That's not what I hear. But just listen to it. The strategic use of cash. It has its purpose, and there's multiple examples of companies that ran out of cash, like the Lehman Brothers in the crisis, completely over leveraged, and all their mortgage-backed securities and stuff weren't very good. Anyway, so it has its purpose.
Yeah, you wrote down, you quoted him, his philosophy on that. It says, cash combined with courage in a crisis is priceless. So,
Yes.
So that really goes back to people who are holding on to cash aren't holding on to it like forever, indefinitely.
No, it's not arbitrary.
Right.
Right.
It's for opportunity, and not just the next opportunity that comes along. Like, oh, this apartment syndication, somebody presented it to me. Sounds good. I think I'll do it. It's, no, I'm going to wait for the real opportunity. Maybe I'll go buy an apartment myself when the market crashes.
Yeah. And Nelson provides a great example in equipment financing in the book of the logger who was buying trucks through traditional finance at 15.3% or whatever he was paying to the finance company for the trucks, the Peterbilts. And Nelson demonstrates that just by financing the things he was going to finance anyway, but putting dividend paying a whole life insurance in between that and, that function in between, he was able to create massive amounts of wealth and then massive amounts of passive income, after he was, sold the business, was done working, whatever, later in life, just by financing the equipment that he needed. Right? Recapturing interest that he was otherwise paying to somebody else's bank. Right?
Yeah.
So it's, by practicing IBC, you really are, gosh, you're gaining so much efficiency and you're creating a massive financial tailwind, like to quote Nelson.
And not only that, one of the greatest things about it for me has been simplicity. It simplifies everything I do.
Yeah.
Like, it's so easy. If I want to go buy a car, I don't have to go to the bank. I don't have to get on and let them, do a credit hit and calculate monthly payments and all this stuff. I just tell, how much is the car? Okay. Hey, insurance company, send me this much. It simplifies. I don't put my money into qualified plans, government-backed plans that lock my money away and penalize me for touching it, and have to keep track of records when I take it out to make sure I don't get hit, with tax bills and other penalties and all kinds of stuff. Make sure it's being used properly, like the 529. Like, you got to use it for a very specific purpose and keep records. No, my cash is sitting there. I can use it for anything and everything, and I use it very wisely. I'm a good banker. I pay it back.
So all that you have control. You have control over the banking function, right? Oftentimes people that are new in our like their prospective client, just kind of learning, they want to see, somebody show me the numbers or show me, I need to see some examples. And of course, we have a lot of examples on this podcast of how you've used it, how I've used it, where we've had clients, guests come on and talk about what they have done. Whether it was, just buying a simple thing that everyone does. They go buy a car. They offer a little discount if you use their finance company, or better, maybe they throw in some floor mats too. I always get them to throw in floor mats, by the way. If you're not asking for floor mats,
that's an easy win.
Easy win. Winter floor mats, all rubber. Oh yeah, they'll throw.
If I don't get floor mats, I'm walking out of here.
I'm walking out. Oh, it's so good. I've got them in all of the cars too. I'm trying to think back. Like, they all have the floor mats. But anyway, just, that is IBC in action. Just going in there from a position of strength and just knowing that you could do whatever you want.
Yeah.
Want to use bank financing? Great. Go do it. You want to use policy loan? Great. Go do it. But you have just more flexibility, more options. And again, that's the lifestyle. It's a way to live. And it's peaceful, and it's, like you said, it's simple. There's no 1099 I'm waiting on, right? You've talked about that. Like, hey, am I going to have a tax document to file for my life insurance contract? No.
Yeah, that's my favorite question.
Screw it up.
That's my favorite question to get from clients, and I get it a couple times a year around this time.
Sure.
They're like, hey, it's their first year of their policy. They're like, hey, what do I need to give to my CPA? I'm like, I want to answer, like a jerk, like a smart aleck, and be like, well, what do you need to tell your CPA about your love life? Like, nothing, period, nothing. You don't have to say anything.
Get out of my bedroom.
Yeah. So it's fun. That's a fun question to answer because it's a one-word answer. You know what else is a fun one-word answer? It was like when you and I went and looked, you were in town and we went and looked at cars.
Yeah.
And we test drove some nice cars.
I drove a Lotus Emura, for those who were wondering, that day.
Yeah.
And
And I
Dave
drove
drove
an
an
Aston Martin, like
Aston Martin
DB11.
DB11.
Yeah. And the car salesman was like, "Well, how would you be paying for this?" One word answer: cash.
Cash.
Yeah. That ends the conversation right there. Done.
Yeah.
No further questions.
And we didn't buy those cars, by the way.
No, we did not.
I told Dave not to buy a British-made automobile because they're pieces of crap.
Yeah. You got me. You got me on the Porsche wagon right now.
Good.
Yeah. Which I went and looked at with the boys last Saturday because there was nothing going on. I was like, let's go look at some Porsches. It's always fun to have those motivations and dreams right in front of you. Reach out and touch them. Sit
Driver's car.
Yeah.
Yeah. It's a far cry from I got excited about the 1993 Dodge Intrepid.
The Dodge Intrepid, yeah. Do they still make those?
No, they don't. No.
Wish they made the Dodge Stratus, though. I would get one. So I could tell everybody, I had to drive a Dodge Stratus.
I had the 2-door coupe version of that. It was actually a cool car. Yeah, it wasn't the 4-door that you're thinking of. It was the 2-door.
Remember the Chevy Beretta?
Yeah, I do.
I had the 4-door version, which was the Corsica.
Yeah, the Corsica.
Not near as cool as a Beretta, but basically the same car.
Yeah, that's right.
Yep.
Anyway.
So, is cash trash? I'm going to say no.
No.
I love having it.
I think, holding a certain amount of cash, and that's going to be different for everybody. It provides us freedom. It gives you, peace of mind, I would say. Like it's very, we talked about how we feel after we've repaid all our policy loans. In fact, I just paid my 7th premiums on the policies you sold me.
I know. I saw you paid Tammy's.
Yep, paid Tammy's. Yep. I just paid mine today, so that one is actually due tomorrow. So you'll see that one too. But I know what it's going to do, and that feels great. I know the amount of cash I'm putting into the policy, the growth of that cash is going to be above what I've just paid. And it's, the protection factor is one thing. I've got death benefit, right? I've got all these advantages compared to my neighbor who, maybe thinks I'm crazy for doing what I do, right? But of course, those of you who practice IBC, those of you who are thinking about practicing IBC, you're going to learn as time goes on that this will become your favorite thing. You'll look forward to paying that premium every single year. The policy is going to get more efficient as time goes on. Very few financial things really become this good with guarantees, right? And all the advantages that we talk about on the podcast, the tax advantages and the protection, the privacy, all those things. So no. So I will say cash is not trash, but where you keep it matters.
Ooh, that's a good one. Where you keep it absolutely 100% matters. Makes all the difference in the world.
All the difference in the world where we can access value, the cash value, right? We borrow against the policy, against the contract without interrupting the growth of the value that we've already established. Okay? So, I could do that with a primary residence, Paul. Okay. Not as quick as I can, because I can get to my money now. It's going to take you 2 months to get that HELOC.
Yep.
If you get it. You might go through underwriting all the way through, and then they're like, sorry,
we knew from day one we weren't going to issue this.
We just wanted all your information.
Yeah, thank you. See you later. Come back later.
So again, it's not this. I always struggle with this as an agent of like, you kind of meet people where they're at, and I don't know what's in their brain of how they're thinking about IBC. So I told the gentleman today, I was like, you need to separate process, IBC, process.
Yep.
Product, dividend paying whole life insurance.
Ooh, sounds like a podcast episode. I think we need to read that one.
Like not an investment. Read page 3 of the book. He had just got the book. He had read another book, and I was like, don't read. I was like, read Becoming Your Own Banker. And if you're going to do this, get the 5th edition hard copy. You can supplement with the Kindle. You can supplement with the Audible version, but there is no substitute for having the softcover 92-page book in your hand.
Yep. Just flip to it whenever you need it, because underline stuff, highlight stuff, dog ear, whatever.
Yep. Those other versions of the book don't have the illustrations in there. Not that they're super important, but some people are numbers people and they want to look at it. And he explains the numbers in there, so you might want to look at that.
Yeah,
it's not in the Kindle version, and obviously the audiobook, it'd be impossible to cover an illustration.
Yeah, good point.
Anyway,
all right,
sorry.
Cool. Well, I think that's good. So hopefully hopefully everybody got something from that, and you're working on capitalizing your system and stockpiling your capital to wait for opportunities, and until they come along, hey, you got a lot of capital sitting there still doing something for you.
Yep. Lots of people took advantage in 2008, 2009 that were cash ready.
Yep. And the cycles always come back around. That's why they're called cycles.
In fact, they made a show about it. It was called Billions with the guy that played Dick Winters.
Yeah.
I mean,
it got a little
weird
when they brought in that he, she, they person. That got a little weird. A little annoying.
It's everywhere now.
It is. Yeah.
It is. What are Timmy and I watching? We're watching several shows that now we have some time together now. So we watch some shows at night.
Yeah.
We're watching the one with the hell's her name? It's about the Los Angeles Waves basketball team, Running Point, I think it's called. Yeah, Running
really?
Point.
Is that any good?
It's okay. Yeah, it's pretty funny. Yeah. But of course, there's, it's less about basketball and more about just drama and
family drama.
It's comedy. It's funny. It's
all right. We'll put that on the list.
You need to go get a haircut. Look at his hair. Folks.
I got to go get a haircut. Your dog needs some attention. It sounds like.
I know he does.
Yeah.
Someone just walked.
All right, everybody. Well, hey, we'll see you back here next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.